E-commerce is no child's play. The perception is that businesses operating in the online marketplace have emerged as a success story, especially during the pandemic. However, this is not true. Amazon is really an exception. To name a few companies operating in the e-commerce line which have shut down over the last 12 months are the Awok.com, Nisnass, the Modist, and now Sprii. Sprii started in 2014 as a mini exchange with just 2 employees around a kitchen table and grew into a multi-million-dollar business with a team of more than 100, selling a wide range of products for babies and mothers in the UAE, Kuwait, Oman, Bahrain, and Saudi Arabia. It had raised close to $15 million, including $8.5 million in Series A funding that was announced in June 2020, making it the second most funded startup in its category within the region. Spree's business model is attractive because it is inventory free. And this means that the business has more cash to invest in big data, analytics, and marketing. Spree's website now takes visitors to a maintenance page which says the website is currently undergoing scheduled maintenance. Spree's Facebook and Twitter pages have also been taken down. Word on the street was that Sprii was on the verge of being bought, but then Spree's founder and CEO Sarah Jones stated in a letter, "As a result of our inability to raise further capital to support the ongoing trading of Sprii, coupled with the conclusion of an unsuccessful campaign to sell the business, I have been forced to take significant steps that will impact the future of the business." Sprii was known to be a good payer in its industry, and this would have made vendors increasingly reliant on Sprii for their sales. However, in the present, Sprii has not paid its suppliers for more than 2 months. And unfortunately, in the current environment, these creditors will have to wait in line. But this does not guarantee that they will be paid. The GCC e-commerce market is expected to reach $19.7 billion by the end of this year, with Saudi Arabia in lead, accounting for $8.3 billion, followed by the UAE for $7.5 billion. However, high competition, thin margins, lack of value creation is not sustainable anymore. Many retailers are directly reaching out to their audience and providing them with quicker and better service. E-commerce giants like Amazon and Noon are not only a threat to the traditional brick and mortar businesses, but other e-commerce websites which are falling prey too. Forgive me for being harsh. Investors need to stop investing their money in every inventory-less sub-industry e-commerce websites which have no USP. Suppliers need to stop listing their products on 1 or 2 platforms only. And at the same time, they need to be keeping a check on the prices which are being offered by these so-called intermediaries. For example, Sprii before December 2020 was running a 30% discount and a 5% cashback. Now this is brilliant for the customer, but for the supplier this could be worrying because these products could be going at prices even below the cost, and this would undermine Spree's ability to pay off its suppliers. Now I personally don't know Sarah Jones, but I'm really curious to know, where did the $8.5 million go? You were just funded in June 2020 and could not sustain this business for even a year. This is me, Taha Zia, signing off. If you have enjoyed this video, make sure you give it a thumbs up and don't forget to subscribe this channel. Thank you.